I'm one of the few who've actually worked in the last period of inflation 40 years ago. And, it's a real thing and you have to manage it. At the same time, there's efficiencies. And I think that's, you've heard me constantly talk about quality. If you've got quality ore bodies, that's your revenue base. You can manage these things. You got to keep at the lower end of the
outlook for gold in this environment. We have obviously inflation at a 40-year high, which needs to be curtailed by the Fed, which got its read on inflation very wrong, doesn't seem to be transitory at all. But now the Fed's hands are probably tied given this crisis, and we have this huge geopolitical risk. So what does this environment mean for where you see the price of gold going?
Well, for a while now, I've been saying that the risk is on the upside for the gold price. And everyone's saying it's not working that well, it should be higher. The gold price in crises behaves strangely because remember, people use it. That's what it's for. A lot of people sell the gold at that point in a crisis. We've seen the markets all over the place. We've seen them show that nervousness early in December of last year, and it's got worse. And right now, the central banks are saying they're going to try and arrest this inflation by looking to 150 basis points a meeting. And, that's not going to get you into real interest rate territory for a long time. And that's a supportive base for gold.
Well, yeah, and arguably they're not going to be able to be that aggressive with their tightening if we have this big geopolitical risk out there, which may or may not escalate.
It's going to cost the world a lot of money.
So do you have a 6 months forecast on the price of gold?
No, we allocate capital in our business at $1,200 gold.
All right.
You would have seen today we've lifted our plan, our 5-year plan, and we look at it at 1,700 gold, because at these high gold prices, there's a cost driver called royalties. So if you actually budget at 1,200, you get your costs wrong. And so we've lifted the gold price in our outlook, but we haven't changed it as a base. We haven't changed the 1,200 as far as allocating capital.
Right. Well, at 1,200, you have been able to issue some very healthy dividends. But what happens if we see rising energy costs, as we've already seen? How does that factor in to your calculations? Where does gold have to be to counter that inflation, not only on the energy side, but also inflation across the board with wages and raw supplies?
Yeah, so inflation is something business people have to manage every day. And, it comes and goes. I'm one of the few who've actually worked in the last period of inflation 40 years ago. And, it's a real thing and you have to manage it. At the same time, there's efficiencies. And I think that's, you've heard me constantly talk about quality. If you've got quality ore bodies, that's your revenue base. You can manage these things. You got to keep at the lower end of the cost curve. And that's important. Replacing your reserves with the same quality reserves. And our industry hasn't replaced the gold it's mined since the turn of the century. So all those things come to bear. But the most important, actually, is you would have seen that Barrick has outlined a roadmap, an engineered roadmap for 30% reduction in its emissions by 2030. All that is really focused on power generation, and it comes with a 15% IRR and a lower energy cost. So, of course, in the short term, we are going to be like everyone else, exposed to both the fuel price and the gas price.
Right.
But at the same time, we are mitigating that through our investment in more renewable energy initiatives.
Very much further down the line.
We're talking between 6 and 18, 20 months.
I know you have a net zero goal by 2050 in terms of that. Is that still feasible?
That's a target, but we have a program, a plan to get 30% reduction by 2030. And we are working on scope 3 emissions. Those are all part of that second phase out to 2050. That's still a work in progress.
And where are you seeing inflation adding the most costs to your operations?
So inflation, of course, the fuel cost is a big inflation, about 50%, maybe a little bit more now because we've seen, you know, oil go over 100.
Right.
So, and that impacts many of our sites. Um, so that is, and then the general inflation, of course, the logistics supply chain has a contribution, but I think that will be resolved. However, given this crisis in Eastern Europe, we're going to see the supply chains impacted by that. I'm pretty sure of. And then, of course, just general, it runs through commodities. Everything is because what we're dealing with in inflation. Remember, is the devaluation of currencies. That's what's driving inflation. That it costs you need more dollars to buy the same item.
Right. So inflation, of course, good for gold, though, as we know. If we get gold at 2,000 this year, which many are saying is really very much within the realms of possibility, does that significantly improve your margins given costs are rising?
Yes, it does. And I think that the point to make here is that if you look at this crisis, there's a whole lot of potential unintended consequences, inverted commas, because we've got very hot markets.
Yeah.
And we are now going to really stress the global economy out because everyone's going to be impacted. If this, goes on for much longer, and this is a serious confrontation, it's going to impact on that. And the threat of that is to collapse the market. And remember, we're in the longest bull run ever in the markets. So, and markets don't go up forever. So it's a very, the whole thing is turned into quite sort of a bit like running in the dark right now. And in times like this, of course, it's always important to have some gold in your portfolio.
Yeah.
And as gold miners, we're immediately long on gold. That's a positive for gold miners.
Running in the dark, granted, there are many known unknowns and unknown unknowns. I love using Donald Rumsfeld's references in scenarios like this. But do you have a sense of what you can expect from your gold production output this year?
So
that you're operating on?
Well, again, copper as the price goes is very volatile. If you look at it historically, it's probably the most volatile metal because it's connected to infrastructure and really the health of the economy, and a lot of it recently has been connected to the Chinese development.
Yeah.
But you just go back a little while, there were copper mines that were being put on care and maintenance 2 years ago. So copper is very volatile. On the outlook of moving towards a more carbon efficient economy, global economy, copper is absolutely key to that.
Do you see yourself perhaps expanding into other base metals then down the line? No? Or other metals that are relevant, or rare earths that are relevant in the decarbonization trend, just gold and copper?
What this market has highlighted is that if you've got byproducts, you should focus on extracting them and disposing of them. But our core business is gold and copper.
All right. Well, speaking of copper, tell us about Reko Diq, which is one of the largest copper and gold mines in the world in Pakistan. Apparently, that could be back within reach for Barrick.
We've got an award from Exit on a dispute between TCC, which is a joint venture between Barrick and Antofagasta in Chile. $6 billion that award is valued at. But as you know, with our work in Tanzania and our recent work in Papua New Guinea, it's much better to find a win-win situation with your host country than to pick a big fight.
Yeah.
And so, and they've both worked very well. Tanzania has been a great success. We're now bringing the mining industry back into that country on the back of the Barrick deal with the government. And so, my initiative, which was started before I arrived in Barrick, I reached out to the government of Pakistan and said, shouldn't we sit down and try and work out a way where we can earn and pay for our own reward, and also the people of Pakistan benefit from us, converting this loan, because we don't own Reko Diq anymore, but but we have a big claim against the government, and so that's where we've been. And my